Good evening, ladies and gentlemen. I feel I need to start with two apologies. The first apology is that I'm keeping you from the main act of the evening, which I'm sure you're all very much waiting to hear. The second apology is that I've been suffering from a very severe dose of man flu this week, which has left me with a sore throat. So if halfway through my speech I give up completely, please accept my apologies. But I'm delighted to be speaking to you tonight to reflect on another very successful year for Ipswich Building Society. I'd like to share with you a number of things today. Firstly, our IT project, which the chairman has already mentioned. It's our biggest challenge in 2013 and will be in 2014. But I'd like to talk about the potential benefits of this to members and the appetite we have for growth in 2014. I'm going to touch on the funding for lending and help to buy schemes that we've heard so much about in recent years and the impact they've had on Ipswich Building Society, on house prices and, for many of you, the most important thing, the savings rates that you're able to earn. I also want to talk about the behaviour of some of the firms in the financial services sector in 2013. And whilst disappointing, the opportunity that brings for a regional building society such as the Ipswich. And finally, and perhaps most importantly, I want to talk about why we intend to be the most socially responsible building society in the United Kingdom. So starting with the IT project, it's probably useful to briefly explain how we ended up with a major IT project. Certainly if we'd been talking at the annual general meeting in 2012, we wouldn't have had a major IT project on the horizon. Ipswich Building Society, along with a number of others, for many years outsourced its IT systems to a subsidiary of Skipton Building Society. There is no doubt that this arrangement saved us significant sums of money and provided us with systems with greater functionality than we could have afforded had we operated alone. But for their own reasons, Skipton decided that they no longer wanted to offer this service, which I can fully understand. And ourselves and 3 other building societies came together to discuss creating a shared service and seek a supplier to meet our collective needs. One society decided to go it alone, but 3 of us have continued to work together. This means that we've been able to work jointly, sharing resources and costs to develop the new system. This shared service has proved beneficial in allowing us to obtain better deals on the supply of equipment and levels of service than we would have been able to do had we operated independently. As I mentioned earlier, it's also meant that we've secured the services of experienced project managers, ensuring our project remains on course and the change is delivered in a timely fashion, something that you as members deserve and we are very much focused on delivering. The board also appointed an independent expert who reports direct to them to help ensure that we're on track. In today's environment, having an effective IT system is absolutely crucial to the running of any organisation. And as well as the scrutiny that we expect from you, our members, our regulators are also very concerned to ensure that this transition is made successfully. Incidentally, we've called the IT project Project Silver. Not because our hair is all going that way during the project, but on the grounds that every cloud has a silver lining. I'm confident that once completed, our new IT system will provide us with the base on which we can build a wider range of services for our members. During the first half of 2013, we focused on mortgage lending before our IT project required significant resource. And I think it's worth pointing out, in an organisation of around about 110 staff, we expect at the moment around 40 of them to be directly involved in that IT project. So you can see it's a significant drain on our human resource. So we wanted to get our business in before that started. During this period, we maintained our staffing levels in branches to ensure members continued to receive the best service levels possible. In 2014, the first half of the year will be focused on migrating to our new IT system. And as I mentioned earlier, we expect to make that move in June. After its successful implementation, we will look to develop our online and mobile services, essential to being a relevant financial services business in today's technology-driven world. However, this can be costly. Evolving our shared services model used for our IT project will help us to reduce those costs. Building societies have talked for many, many years, and I've personally been involved in lots of discussion on the importance of shared services. And from the questions that members submitted, we are aware that these things happen elsewhere. And getting an effective shared services operation is a nettle the society is now determined to grasp, and one which we expect to lead the way on. As a result of our IT project, in 2014, we are not looking to generate as much mortgage and savings business as we have so successfully done in recent years. We will, though, continue to offer products to help first-time buyers and supporting the buy-to-let sector, which I commented on a few moments ago. Renting rather than buying is the best solution for many, particularly those who may need to be moving regularly as a result of employment changes. I should also touch upon a change in mortgage regulation that is taking place from April the 26th this year. The mortgage market review will see lenders move to a new affordability model, replacing the conventional salary multipliers, which it has to be said have served the test of time very successfully. It will also require the society to ensure that all its new business is dealt with on an advised basis. Whilst changes that help to ensure all lending is as responsible as possible are welcome, particularly given the excesses of some in the industry in the years leading up to 2008, there are some early indications that credit-worthy borrowers who don't fit the usual mode may struggle to obtain a mortgage. This could be particularly those on low incomes, the self-employed, and perhaps contract workers. The law of unintended consequences could very much apply to the mortgage market review. The society is fully prepared and ready for these changes, and again, we've been trying to run that project alongside the IT project, and that's taken up a lot of human resource. I am concerned, though, at the potential impact of the new regulations on the market in the short term. I can foresee lending reducing significantly from April onwards for perhaps at least 3 months as new processes and systems are bedded in. This will happen just at the time the market is usually at its strongest, but of course it may help deal with a potential house price bubble. I'm not sure that the government have perhaps realised the implication of mortgage lending falling dramatically in the lead up to a general election in 2015. 2014 will see us focus on our existing members, and we will be expanding our programme of exclusive member events. For me, society membership is more than just having a mortgage or savings account. True mutuality is about the whole relationship you have with us and our joint belief in what the society is here to do. I'll return to this theme later when I discuss our role as a responsible building society. Moving on to the wider economy, in 2013 we saw the real impact of the government's funding for lending scheme. The provision of very cheap funding from the Bank of England had a limited impact on the levels of bank lending. However, it is clear that building societies have stepped up, increasing their lending as a result of funding for lending by over £21 billion. Interestingly, at the same time, while banks drew on the cheap funds, they reduced their lending by almost £11 billion. Whilst that in itself is disappointing, the impact of funding for lending was felt most keenly by savers who saw rates in the market fall across the year by over 0.75% on term accounts. As the chairman said, at the Ipswich we have tried to maintain rates at the highest levels we can. However, during the first half of the year, we found our rates becoming increasingly attractive compared to others, and we started to see a greater inflow of savings balances than we needed for our lending plan. Whilst we need to retain sufficient levels of liquid funds, we only earn just over 0.5% on these. Therefore, any balances in excess of our plans ultimately cost the society money. If we lose too much money this way, we compromise our profitability, essential, as the chairman mentioned earlier, to building our long-term capital and ensuring we are sustainable for the years ahead. The recent budget saw significant changes to the rules on individual savings accounts. We, along with all other building societies, have been campaigning for this change for some time. Equalising the treatment of cash and stocks and shares ISAs is a very welcome move, as is the significant increase in the annual savings limit. It certainly added a bit of extra interest to this year's ISA season, which otherwise wouldn't have been there. I'm sure that pensioners will welcome the introduction, or should it be the reintroduction, of the pensioner or granny bond. We need to be aware, though, that if this leads to significant withdrawals from banks and building society accounts, it does reduce the amount of money available to lend either on mortgages or elsewhere. I do find it an odd economic plan that the Bank of England will lend money to banks and building societies at 0.25% and then borrow it back from savers at 2.8%. It doesn't seem to me to be a terribly clever way of going about things, but that's what we're going to get. And you could argue that again is something that's happening as part of the lead to the next election. Help to Buy also featured during the year. These government schemes offered either an equity loan to borrowers to form the majority of their mortgage deposit or a guarantee to protect the lender. We decided not to take part in the schemes as we believe the long-standing arrangements we had for offering 95% loans ourselves provided more flexibility and could be tailored to the societies and, more importantly, our members' needs. Generally, I feel that government intervention in the housing and mortgage market distorts things, and in the case of Help to Buy, may have created an unsustainable price bubble, particularly in London and the South East. Hopes that Help to Buy will produce a demand-led surge in private house building is, in my mind, misplaced. The public sector, in some form or another, will need to help fill the housing gap, and we also need quicker and perhaps less myopic planning system to provide land and permission for new homes. While government schemes may be frustrating, the behaviour of some of the largest banks, and sadly a mutual bank, has continued to be poor in 2013. Examples include bonus payments by the back door to avoid European regulations, bonuses paid to executives of failing business units, LIBOR rigging, exchange rate fixing, and failures in corporate governance. It's no surprise then that levels of trust in the financial services sector has never been lower. To quote a recent Sunday Times headline, they still don't get it. And this leads me to my final point, that of how we intend to place at our core to be a socially responsible building society. From our behaviour with members, employees, suppliers and our local community, we will endeavour to encourage others to join us based on our great products, services and attitude towards those we deal with every day. During 2013, the Society's board and executive spent time looking at the future and how Ipswich Building Society could continue to thrive and remain both relevant and sustainable. To do this, we decided to look back upon our history, and Sarah touched upon this earlier. The Freehold Land Society was established to help maintain access to the vote and to provide the opportunity of home ownership. Both of these enabled social choice and change. In the context of poor behaviours, a financial services business that acts on behalf of its members rather than shareholders, and one that is committed to making a difference across society, has the potential to offer a real and viable alternative for consumers fed up with the usual institutions. But it's important that we get this right, as in today's world, financial services are as essential to consumers as electricity or water. Society just can't function without it. The government has recognised the need for a diverse financial services market, rather than the over-reliance on a few giant banks. However, their response has been to create yet more banks, a lengthy and expensive process. This seems a bizarre response when there are 40 building societies right now that can help meet the need for greater diversity. We need government to actively support building societies by creating a level playing field with shareholder-owned businesses. especially in the areas of capital raising and the opening up of the money transmission markets. This would help the sector to offer a full range of banking services. It works in the US and Australia, so why not here? We'll lobby our trade association and politicians to help support these aims. Lack of trust, the need for more choice from consumers, and the requirement for a more responsible financial services business model all came together to form our vision to be the UK's most socially responsible building society. Since 2007-8, building societies have clearly offered an alternative, taking market share in the savings and mortgage markets. The opportunity now is for a building society to clearly demonstrate how their behaviours and values differentiate them from other institutions. It is apparent that many consumers are seeking an alternative, and that's particularly amongst the young, and we will aim to offer this to them. Delivering this vision will be no easy achievement, and we have a clear plan to support this. There's three key themes: to continue to build our capital, protecting our members and supporting future growth; ensuring the balance between savers' and borrowers' rates is proportionate and generates sufficient profit to grow our capital; and to be relevant, not just to current members, but to those who haven't sampled our services yet. Being socially responsible will run through the core of each theme. I hope I've given you a flavour of some of the work we have been doing and our future plans and direction. But more importantly, I hope that both the Chairman and I have clearly demonstrated the Society is vibrant, ready for the challenges ahead, and determined to put you, our members, at the heart of all our actions. Thank you.